Welcome to the Deep Dive. Today we're taking a look at all the buzz around quantum computing.
Yeah, it's everywhere.
Right. And specifically, we're trying to figure out if investing in one of the main companies, IonQ, actually makes sense right now. We're basing this on an article from The Motley Fool. It's called, Is IonQ Stock a Buy? Written by Brett Schaefer, just came out April 24th, 2025.
And, Motley Fool, they've been around quite a while, since '93, I think.
Yeah, that sounds right.
Their whole mission is about making investing, more understandable for people. They reach a ton of folks every month.
So presumably they know their stuff.
Generally, yeah. Their analysis usually gets some attention.
Okay, good. And this whole topic feels really relevant, doesn't it? I mean, we've seen so much excitement and money pouring into AI, electric vehicles.
Oh, yeah, those waves of tech enthusiasm.
Exactly. And now quantum computing is kind of bubbling up as this next potentially massive thing. I mean, a genuinely new type of computer. We haven't really seen that in, ages.
It's definitely got that revolutionary feel. But the article, it does a good job balancing that excitement. We all know the stories, like Nvidia, right? Get in early, huge payoff.
For sure.
But let's be honest, there are way more stories of hyped up tech companies that just fizzle.
True. Lots of those.
So that's the key question today, really. Using this Fool article as a guide, is IonQ the next Nvidia, or is it more, hype than substance right now?
Okay, let's dig in. First, the potential. Quantum computing itself. The article gives some good context, reminding us how far we've come since, the transistor back in 1947.
It's wild. Shrinking components has given us cloud computing, smartphones, all this AI stuff.
Yeah, but pushing traditional computing further is getting insanely expensive, right?
Insanely. The article mentions ASML. They make these lithography machines for chip making.
Right.
One machine costs something like $378 million.
Wow, just one.
Just one. And that's just one part. The whole AI infrastructure build-out. People are talking hundreds of billions a year by 2030. It's mind-boggling.
Okay, so that's the setup. Classical computing is powerful, but hitting limits, getting very expensive.
Exactly. And that's where quantum computing sort of enters the picture. It offers a potentially fundamentally different way to do certain high-performance tasks. More efficiently, maybe?
How does it actually work? The article mentions quantum mechanics. Superposition, entanglement. Sounds complicated.
It is, but the basic idea is using these quantum properties allows these computers, even early ones, to tackle specific, really complex problems much, much faster than our best supercomputers today could. Problems that are just intractable otherwise.
Okay, so not for checking email, but for the really hard stuff.
Precisely. Think drug discovery, finding new molecules, or optimizing incredibly complex systems like logistics or financial modeling, even maybe boosting AI down the road. Huge potential applications.
And IonQ is right in the thick of developing this.
They're definitely one of the key pure play companies. And the article notes something interesting in their first-gen machines. You can actually access them already.
Oh, really?
Through cloud providers, like Amazon Web Services. So they're one of the first to actually get systems out there for people to start experimenting with commercially.
Okay, that does sound like a significant step, getting it out of the lab.
It's a milestone, for sure. But, and this is a big but in the article, then we get to the reality check.
Here it comes. The financials.
Well, first, the practicality. Yes, quantum can solve some problems faster, but the article stresses for most things we use computers for daily, they're not better yet.
Okay.
And finding those killer, real-world applications where quantum is clearly the best solution, it's still early days. They've been kind of sparse so far.
Right. The potential is there, but the actual paying use cases are still emerging.
Exactly, which leads directly to the financials. The numbers aren't pretty, according to the piece.
Lay it on us.
Okay, so IonQ's revenue is under $50 million a year.
Okay. Not huge for a company with big ambitions.
Not huge. And compare that to their spending. They're burning through negative free cash flow of $129 million annually.
Oof. So spending way more than they make.
Way more. Now, they do have cash on hand, about $364 million.
Okay, that's a buffer.
It is, but do the math. At that burn rate, it lasts them less than 3 years.
Less than 3 years.
Wow. And the article points out that the cash burn has actually been increasing, not going down. That's not the direction you want to see.
No, definitely not. Especially if, as the article says, analysts think widespread commercial quantum computing is still what, a decade or more away?
Yeah, that's the timeline challenge. A decade is a long time to keep funding operations when you're burning that much cash. How do they bridge that gap?
And they're not alone in this, are they? There's competition.
Oh, yeah, big competition. The article mentions Microsoft, Alphabet, Google, basically. These giants have vastly deeper pockets.
Right. They can probably fund their quantum research from their existing profits.
Exactly. They don't necessarily need to keep going back to the market for money, but IonQ, they almost certainly will need to raise more capital.
Which
means likely issuing more stock, and that dilutes the value for existing shareholders. Each share you own becomes a smaller piece of the pie. That's a significant risk factor.
Okay, so potential is huge, but the path there is long, expensive, competitive, and financially risky.
That sums it up pretty well, which brings us to the article's conclusion on whether the stock is a buy.
Yeah, the bottom line. What does the author, Brett Schaefer, actually say?
He really emphasizes that line between a promising, maybe unprofitable company with proven tech and, well, he calls it a science project.
Ouch. And where does he put IonQ?
Based on the current financials, the timeline, the competition, the article suggests IonQ leans more towards the science project side right now.
Meaning high risk, uncertain outcome.
Very high risk. And, crucially, even if quantum computing does take off commercially, there's absolutely no guarantee IonQ will end up being one of the winners.
Right, someone else could leapfrog them, or a different approach to quantum might prove better.
Exactly. It's still so early. And then there's the valuation issue the article raises.
The stock price itself.
Yeah. IonQ has a market capitalization, the total value of its stock, of around $6 billion.
$6 billion. With less than $50 million in revenue and burning cash.
That's the disconnect the author highlights. Does a $6 billion valuation properly account for all those risks we just talked about? The article argues maybe not.
Seems like a mismatch.
That's the core of the conclusion. The Motley Fool piece is pretty direct. They hope IonQ succeeds. The tech is exciting, but
don't buy the stock right now.
Essentially, yes. The author concludes it's just not a prudent investment to add to your portfolio at this moment, given the risk-reward balance.
Okay, so let's wrap this up. Key takeaways seem to be quantum computing. Amazing potential, absolutely transformative if it works out.
Huge potential, but still very, very early stages. Think decades, not necessarily years, for broad impact.
And IonQ is a definite player, pushing the science forward, even getting some systems out there via the cloud.
Yep, a key innovator. But facing serious headwinds. Big financial burn rate, limited runway on current cash.
Stiff competition from tech giants with way more money.
And huge uncertainty about when the market really develops and whether there'll be a leader when it does.
So back to that first question, is IonQ stock a buy? This analysis suggests the risks right now look pretty substantial compared to the potential reward, especially with that $6 billion valuation.
That's the takeaway from the Fool article, yeah. Too much risk for the average investor at the current time.
All right, so maybe a final thought for you listening. If you are interested in this space, what else would you need to see? What milestones or signals would convince you that a company like IonQ is moving beyond that science project phase and becoming a truly viable, scalable business?
Yeah, that's the question. Is it consistent revenue growth, key technical breakthroughs, major commercial partnerships?
Something to definitely keep an eye on as this whole quantum field unfolds. It's going to be fascinating to watch.
Absolutely.
Thanks for diving deep with us today.